What type of strategy is a company following if it is a positioning itself as a unique one in the industry? Black swan, differentiation, blue ocean, cost leadership. Black swan, differentiation. The portal suggests two major competitive strategy of companies: cost leadership and differentiation. Cost leadership. Under this strategy, the firm seeks to be the low cost producer and hence the cost leaders in its industry. Cost advantages vary from industry to industry. Differentiation strategy. Under this strategy, the firm positions itself as unique in this industry. Again, the possibilities of differentiation differ from the industry to industry. Michael Porter. It's not like a traditional bond. Zero coupon convertible bond. A convertible bond is not like a normal interest paying adjusting bond. A convertible bond is a combination of a plain vanilla bond plus an embedded equity call option. It gives the bondholder the right to exchange the bond for a specified number of common shares of the issuing company. A convertible bond is not like a normal interest paying adjusting bond. A convertible bond is a combination of a plain vanilla bond plus an embedded equity call option. It gives the bondholder the right to exchange the bond for a specified number of common shares of the issuing company. Which valuation metric is appropriate to value a firm belonging to an industry which thrives on high volume and low margin model? Uh, the price to sales ratio is calculated by taking a company's market capitalization and divide it by the company's total sales. In case of companies not earning profit, say, or companies on high volume, low margin business, instead of earning best ratios, investor can look at the PS ratio to determine whether the stock is undervalued or overvalued. In a discretionary PMS, a client cannot impose which of the following condition restriction: the type of securities in which investment can be made, market timing for buying selling the securities, the investment approach, the industry sector in which investment cannot be made. Discretionary cannot impose which of the following condition restriction: the type of securities can be made, market timing. Discretionary portfolio manager individually and independently manage the fund of each investor as per the contract. This could be based on an existing investment approach or strategy which the portfolio manager is offering, or can be customized based on client's requirement. The client's requirement can include the type of investment approach, sectors, industry in which not to invest, but the client cannot specify the market timing to buy and sell. Identify the true statement. Performance attribution analysis is the correct way to describe the amount of performance fee that can be charged by a portfolio manager. Performance attribution analysis identifies whether a portfolio has outperformed the benchmark or it has not outperformed the benchmark in terms of risk return metrics. Performance attribution analysis is the correct way to decide the amount of performance fee that can be charged by a portfolio. Analysis whether portfolio has outperformed. The underlying theme behind various attribution analysis approach is to dissect the return into majority two components: return driven by the benchmark and the differentiation return, and then identifying and quantifying the sources of differential return to primarily establish whether it was driven by the skill of the portfolio manager or some random factors. An investor has deposited 50 lakhs with a fund manager. Out of this, only 35 lakhs was invested in this and earned 3.4 lakhs. How much return did he investor effectively earn? An investor has deposited 50 lakhs with a fund manager. Out of it, 35 lakhs was invested and this earned 3.4 lakhs. The investor has deposited 50 lakhs, so that effective return has to be calculated on the total amount deposited. Return on investment, net return on investment cost, 6.8%. Identify the incorrect statement with respect to currency risk. Currency risk can increase the realized return on a foreign investment. Currency risk can decrease the realized return on foreign investment. Currency risk is covered by the return generated on a foreign. Currency risk arises due to unpredictability in exchange rate. Currency risk is covered by the return generated on a foreign investment. Covered by the returns generated. The fluctuation in currency values can either enhance or reduce the returns associated with foreign investment. This is called currency risk. This risk arises due to the unpredictability in exchange rates. Returns on foreign investment can never be covered by currency risk. Is to consider a part of rebalancing cost. Stamp duty levied, brokerage, security transaction tax, PMS fee payable is not considered a part of rebalancing cost. Stamp duty, PMS fee. There are two types of cost in rebalancing: transaction cost and tax cost. Transaction cost is the time and money cost like research cost, brokerage for buying and selling securities. Tax cost includes the securities transaction tax and there are two types of cost in rebalancing: transaction cost, tax cost. Transaction cost is the time and money cost like research cost, brokerage, etc. for buying and selling securities. Tax cost include the securities transaction tax, stamp duty. PMS fees is not part of rebalancing cost. Which of these income will not be earned by a PMS client? Interest income, capital gains from sale of business, dividend income, or capital gain from sale of securities. Which of these incomes will not be earned by a PMS client? Capital gain from sale of business, dividend income, capital gain from sale of securities. Capital gain from sale of securities. A PMS client can earn income from dividend on share and units of mutual fund, income from interest on fixed income securities, short-term and long-term capital gain on sale of securities, business income from purchase and sale of securities if gains are categorized as business income. PMS client can earn dividend, mutual fund unit, income from interest, fixed income, short-term, long-term capital gain on sale of securities, business income from purchase and sale of securities if gains are categorized as business. An investor has a limited and low means of income. Which of these goals should be given low priority? An investor has a limited and low means of income. Which of these goals should he gives a low priority? Buying a house for his own residence, buying a health insurance, buying a multi-utility vehicle, providing for children. When a person has a low income, then there are some goals which will have a low priority. There are goals that are not particularly painful if they are not achieved. These could range from buying a farmhouse to luxury house. Chapter 12 is three of SEBI portfolio manager regulation relates to speculation and risk trading, insider trading, institutional trading by a foreign institution. It relates to proprietary trading. The code of conduct for the portfolio manager is specified in the schedule 3 of the SEBI PMS regulation. Clause 12 and 112. A portfolio manager or any of its employee shall not render directly or indirectly any investment advice about any security in the publicly accessible media, whether real time or not real time, unless a disclosure of his long or short position in the said security has been made while rendering such advice. In case an employee of the portfolio manager is rendering such advice, he shall also disclose the interest of his dependent, family members, and the employer, including their long or short position in the said securities while rendering such advice. Clause 12. A portfolio manager or any of its employees shall not render, directly or indirectly, any investment advice about any security in the publicly accessible media, whether real time or non real time, unless a disclosure of his long or short position in the said securities has been made while rendering such advice. In case an employee of the portfolio manager is rendering such advice, he shall also disclose the interest of his dependent family member and the employer, including their long or short position in the said securities while rendering such advice. There are several benefits of economies of scale for a mutual fund. Which of these not a benefit of economies? Negotiating better terms with broker, cost of investment research, engaging professional manager, providing all required information. There are several benefits of economies of scale for a mutual fund, which not benefit of economies of scale of mutual fund, providing all required negotiating better terms with brokerage, cost of investment research, engaging professional managers. Providing pulling of large sum of money from many investors make it possible for the mutual fund to engage manager managing investor Individual investor with small amount to invest cannot themselves afford to engage such professional management. Large investment corpus leads to various other economic scale. For instance, cost related to investment research and office space gets spread across investors. Further, higher transaction volume makes it possible to negotiate later term with brokers, bankers, and other service providers. A company markets beta is 1.25 and the risk-free rate of return is 6%. What is the estimated equity return as per CAPM if the market risk premium in the country is 9%? अरे यार, as per capital in CAPM, the required return on security or portfolio is computed RF plus beta RM minus RF. Risk-free return beta of the securities portfolio RM minus RF risk premium substituting 6 plus 1.25 into 9. What are the bonds known as which are issued by government agencies? What are the bonds known as which? Government agencies, statutory bodies, and public sector. For which categories FPI is Section 9A of the Income Tax Act 1961 not applicable category 1 FPI only. Some of the conditions mentioned in Section 9A of the Income Tax Act are not applicable to an investment fund set up by the government or central government of a foreign state or sovereign fund. For categories, what does upfront means under the PMS regulation? A patron will not charge any fee first and then will not charge any fees at beginning before providing any services to client. A provide PMS regulation, no upfront fees shall be charged by the portfolio manager either directly or indirectly to the client. Is the topmost attribute while choosing a comparable benchmark index. Number of securities investment approved blue chip in the measure. The topmost attribute while choosing a comparable benchmark index. Blue chip measurable performance. Global investment performance standard defines benchmark as an independent rate of return hurdle rate, forming an objective test of the effective implementation of investment strategy. It is a standard or point of reference. It is a collection of investment opportunities or securities or risk factors which represents the investment characteristic and investment approach of the portfolio being evaluated against it. Can be a day count convention in the fixed income market of the world. All of the in the money market, the day count convention followed is actual 365, which means that the actual number of days in month is taken for a number of days, whereas the number of days in a year is taken as 365. Hence, in the case of T-bill, which are estimately essentially money market instrument, money market convention is followed. In some countries, participants use actual. Some countries use actual 360, while some use 365. Before SEBI issues the certificate of a registration to a PMS, it has to ensure that the applicant has appointed compliance officer. Before issuing certificate of registration, the regulator will ensure whether, in addition to the principal officer and compliance officer, the PMS applicant has in its employment at least one person who has a graduation from university or institution recognized by the central government or a state government or a foreign university, and an experience of at least 2 years in related activities in the securities market, including a portfolio manager, stockbroker, investment. Mr. Soham is a fund manager and he has invested in the fund in two stocks A and B in the ratios of 6:1, 6:4 respectively. The beta of a stock A is 1.2 and the beta of a stock is 6.2. Calculate the portfolio beta. तो एवरेज कर लेंगे. एवरेज क्या होगा? 6.2. The fund have been invested in the ratio 6:4, 60:40. The beta of the stock is 6 into 1.2. अरे यार सही जा रहा है. 0.06 into 1.2, 0.04 into. Is it correct for the PMS to execute off-market transaction in the client's account? Yes, when it's required for providing margin for client's own position. Yes, when it is for dealing in unlisted security. Yes, when it is settlement for client's own trade. As per the SEBI do's and don'ts for the portfolio manager, the portfolio manager shall not execute off-market transfers in client accounts except for settlement of the client's own trade, for providing margin collateral for client's own positions, for dealing in unlisted securities in accordance with the regulation with specific consent of the clients for each transfer, for any other reason specified by SEBI from time to time. Our future contract is not decided on the date of entry into the contract. The maintenance margin, discounting rate, the quality of the asset to be executed. Maintenance margin, the discounting rate. Future contract is not decided on the date of entry. The maintenance margin or the discounting rate. In a future contract, the quantity, the quality, the margin, the time etc. are all decided in advance. There is no discounting rate in future contract. Maintenance margin is the margin minimum amount that must be maintained at any given time in your account while trading in future. The discount rate is the interest rate used to determine the present value of the future cash flow.